Here at the Mises Institute, we talk a lot about our opposition to the Federal Reserve and central banking as a whole. But most people are still unaware of how the Fed is making their lives harder. So let's run through it real fast. First, the Fed causes inflation. It does so by increasing the money supply, which is the only way to raise prices across the entire economy. Naturally, prices fall over time as the economy grows and the luxuries of the past become more affordable and accessible. The Fed reverses this and purposely makes prices rise every single year. And the pain of that is not experienced equally. The people who get the new money first are made richer because they're still faced with the older, lower prices. In the US today, that new money mostly benefits government officials and the financial sector, meaning the Fed redistributes wealth and resources towards Washington and Wall Street. That redistribution allows the government to grow much larger and more tyrannical. Everything from the domestic surveillance state to the crazy foreign aid programs unveiled by DOGE recently are enabled primarily by the Federal Reserve. The same goes for the financial sector. The explosion of Wall Street's size and power since the 80s is not natural. The Fed brought it about through easy money policies and bailouts. Banks also benefit, as Fed regulations protect them from competition, which encourages riskier banking practices that threaten everyday people's savings. Investment portfolios and retirement funds are impacted too, as the stock market no longer reflects companies' fundamentals. This warping of financial markets, mixed with permanent price inflation, both brought on by the Fed, encourages people to consume more and save less, to the detriment of their future selves and descendants. Finally, the Fed causes the recessions we have been and will be forced to live through. The new money it creates enters the economy through credit markets. That drives down interest rates, encouraging producers to open new lines of production while discouraging people from offering new loans. That creates an artificial economic boom as both production and consumption increase. But the new production lines are not based on the availability of real resources or the wants of the end consumer, and so they are doomed to fail. Typically, the Fed is forced to pull back and raise rates, often because of inflation, which forces producers to face reality and stop the unsustainable production. That's the recession. They're both brutal for everyday Americans and completely unnecessary. So, to review, the Fed causes inflation, transfers wealth and power to the government and politically connected industries, makes it costlier to act prudently in the interest of our future selves and descendants, and traps us in a recurring nightmare of recessions. It doesn't have to be this way. The Fed can and should be done away with.